Hey, it's your man chollyP. Today we're going to go over the killer crossover strategy, and I'm going to talk about the way that I currently trade this strategy, because the first video I ever put out on this, I don't trade it that way anymore. So there's definitely something brand spanking new that I know I've never talked about that I'm going to show in a few examples in this video. So definitely pay close attention. Let's go ahead and jump into the first example. The first rule is that H1 needs to consolidate just above or below a 50 and 144 EMA crossover. So in this example, obviously the consolidation is happening above this 50 and 144 EMA crossover. The 50 is my gold line. The 144 is the purple line. So as the 50 is crossing over that 144, if I see H1 is consolidating, then I need to start paying attention and start looking for the second rule to happen. And the second rule is that a confirmation candle body needs to close past the last prominent point in the formation. In this situation here, the last prominent point is at the bottom of this candle body right here. You don't worry about the wicks, just pay attention to the candle bodies. The reason I know it's the last prominent point is because, I mean, the market is just chopping. It's chopping, and then we get that, that confirmation candle body. But as it's chopping, if you look at the bottom of these chops, where's the last prominent point? Is this one right here, that little area there. So that's why I drew a line there, because the candle body's made a prominent point, and then we get a confirmation candle that closes past that last prominent point. The only other caveat to that rule would be pretty much the third rule, which is more of a note, simply saying the formation is at least about a day wide. So if you look where the consolidation started over here towards the end of London session, and then the confirmation candle happened pretty much in the middle of London session, that's almost a day wide. So we need it to be at least that wide of a formation. But once you get this confirmation candle to close past the last prominent point, you're just going to go to the 15-minute chart. And we only have one more thing to check, and that is the fourth rule, which is on your entry time frame, which is M15. We're always going to take our entry on M15. The 50 EMA has not yet crossed over the 144 in the direction you want to trade. Now we want to sell this. The reason we want to sell it is because the easiest way I can explain it is simply you're going to trade back towards the crossover. So since we're consolidating above this crossover, we want to sell the market back down towards that crossover. All right. So we got this confirmation candle. We go to the 15-minute time frame. And we want to make sure that the 50 EMA has not yet crossed over the 144 in the direction you want to trade. So like I just said, we want to sell this. So that means the 50 EMA on the 15-minute chart cannot yet have crossed over the 144 EMA. And we want to enter the trade while it's above the 50 EMA, when the price is above the 50 EMA. So right here, this candle is where price came up above the 50. I just know based on looking at the chart, I wouldn't have entered until this candle, I believe. Let me see. This one, this red candle. This is the earliest candle I would have gotten in on, only because I don't trade before 7 a.m. Central Standard Time. And as the reason why is because actually exactly what you see. If I would have been willing to trade at, say, 6 a.m. Central Standard Time, I would have got in maybe, let me just use this line. I'd have probably got in around right here. I would have put a 20 pip stop loss, because that's just normally kind of what my stop losses are. And I would have got knocked out, because that's 21.5 pips right there. Versus if I had waited till 7 a.m., I let the market go ahead and go crazy a little bit, and then it's still up here. So at the end of this candle, I jump in right here, because this is the 6:45 a.m. candle. That candle closed. I jump in here. The most drawdown I'm dealing with is 7 pips, just under 7 pips. So I enter here, and then you see what happens. Yes, price is gonna hover around and have us kind of on edge for about an hour and a half or so, but it eventually drops, and it drops really good. And you could have held that trade for a couple of days, a few days, and caught well over 100 pips on that trade. The killer crossover strategy is normally good for 100 pips. So if you're a swing trader and you don't catch 100 pips the day it happens, hold that trade because it's going to keep going. All right, let's look at another example. This example, we're going to look at a buy. We're going to be looking right here inside of this box, more so down here. So the first rule, H1 is consolidating in this situation below a moving average crossover. Now, something I didn't mention in the last example, the crossover needs to be either, because this consolidation I would say would be starting right here and it ended about right here. The crossover needs to be like where the actual crossover happens needs to be either in the middle, towards the middle. It doesn't have to be dead center, obviously, because this is an example I'm showing is way off center. But what I'm getting at is it shouldn't be more left. Like you don't want the crossover way over on this side. You want it at least somewhat in the middle, or it can be way over to the right. Way over to the right is fine. Way over to the left is not cool at all. So, but in this situation, we've got the consolidation happening. Here's our crossover, and you're just kind of paying attention to that second rule, which is that you want it to pass the last prominent point. Now, when this crossed over, by the time this crossed over, here was our last prominent point. And so I'm going to draw a line here on top of this candle body. Here's the confirmation candle that closed above that last prominent point, which means now we just need to go down to the 15-minute time frame. And we need to make sure before we enter this trade, because price was up here basically after it broke. And we need to make sure the 50 EMA has not yet crossed over the 144 on the 15-minute time frame, which is what we're on now. And we see it has not. So all we're going to do is wait on price to come down and grab our 50 EMA, or essentially let it go under the 50 EMA. What time did this go up under it? 11 o'clock chart time, which equates to 3 a.m. Central Standard Time, my time. So my London session hours are 2 a.m. to 4 a.m. That's when I'll take a trade, like enter the market. This happened at 3 a.m. During the 3 a.m. candle. So I would have entered the market right here and rode that on up. That's 170 pips for that day. So that's a great day. This one, you could have held it just a little bit longer and caught upwards of about 200 pips, it looks like. But yeah, if you don't take 170 pips on a day, then you got some greed issues. But yeah, there's another example. Let's look at one more example here. And this one is a bit of a difficult one, so I wanted to make sure I showed this one. Now, here is extremely choppy. However, this is still what I would consider to be somewhat of a consolidation, even though you've got this huge move right here. The reason I say it's consolidation is because it's a head and shoulders pattern, or a upside down head and shoulders pattern, to be more specific. So you have the shoulder here, a head right here, and then another shoulder right here. So it's an upside down head and shoulders pattern. The only way a head and shoulders pattern can form is if the market is consolidating. So once again, even though we got this huge move down, overall, it was making a head and shoulders pattern, which means that is consolidation. Let me get these out of my way just a little bit real quick. So let's go over the rules. So the price is consolidating under the 50 and 144 moving average crossover in this example. Once again, we need that crossover to be either somewhat in the middle or at least over to the right of the consolidation. Then you need a confirmation candle to close past the last prominent point within this formation. Now, in this situation, the prominent point's a little bit more difficult to spot, only because the 10 EMA is kind of in the way, to be honest, which is my white line. But I consider the last prominent point to be right here at the top of this body, because you had price coming down, and then it kind of did like that, then went up. So here, that's why I said that's kind of my last prominent point right there. This confirmation candle right here is the one that closed past that prominent point. So we go down to the 15-minute time frame, since we got confirmation already, and we need to make sure that the 50 EMA has not yet crossed above the 144, because we want to trade this as a buy. So we want the 50 to still be under the 144 on M15 according to our last rule. And as long as it is, then you simply wait to enter the market. So we wait on price to come down below our 50 EMA. You hop in the trade right around here, and you can be in and out of that trade in really about an hour, 150 pips, just like that. So, which clearly that was news, but yeah, so that was another good trade. This is something I want you to look out for and avoid taking this particular type of trade. We're looking right here. We got a moving average crossover right here. You got everything kind of working. So, I mean, this would be the last prominent point in the market. You got this confirmation candle at close past right here, which was, again, the last prominent point. The reason I say do not trade this is because when you look over to the left, you got all this stuff going on right here. And I found that whenever the killer crossover strategy forms properly, there's nothing immediately to the left. So the examples we just looked at, like on the first example, look over to the left, it's blank right there. Like the immediate left is kind of blank. What was the second we looked at? Was GJ. Over to the left, it's pretty blank over here for a while. Then we looked at this one right here. Again, pretty blank over here for a while. So that's the difference between, like, right here, you look over and you run into stuff pretty quick. If you're running into stuff on the left, don't take that trade. You see what happened, it's going to get you jacked up. That's just something I wanted to point out, something I found. All right, so now what I want to do is go over a new way that I found that we can confirm and take these killer crossover setups. We're going to be looking right here. And the reason I came across this way is because I found myself missing what I thought were killer crossover setups, because essentially they never came back and grabbed the 50 EMA or something. Like it was just something weird going on. In this particular situation, this brings me to the last note on the checklist. If you get a H1 reversal pattern on the third hit and it closes past the 10 EMA, you can consider the setup confirmed, even if it hasn't closed past the last prominent point. So I'm going to skip the first few rules and just say, here's our last prominent point in the market on this particular formation. If we would have waited and did it the way that we normally do, then this candle right here on H1 is what we would have said is the confirmation candle. However, I don't even have to go to the 15-minute chart. You can see price never came back up and grabbed the 50, what would be the 50 EMA on the 15-minute time frame. Also, it took off, and remember I said I only trade between 2 to 4 a.m. in London session. Well, by the time this happened, it was outside of my trading times. By the time it would have came up and grabbed the 50 EMA, yeah, it was already gone. So this actually was our confirmation candle. This red candle right here, because again, on that last note, it says if you get an H1 reversal pattern. So now you need to learn your reversal patterns. This right here, this green candle and this red candle is what's called a railroad pattern. It's just a candle that goes straight up and then another one that comes behind it and goes straight down. They can be equal height, or this candle, the second one, can be a little bit longer like it is in this particular situation. But this is still a railroad pattern, reversal pattern. And it's on the third hit, because you've got like 1 goes down, up, 2 goes down, up, 3 hits to the high. Okay. Got to be on the third hit. And even though you might see this and be like, oh, it's, isn't this the third hit and this would be hit number 4, or maybe like a 1, 2, 3, 4, 5. When you're learning to decipher what a hit to the high or a hit to the low is, if you've got a cluster of candles before it makes a major move down, that whole thing is a hit. So we've got a cluster here, which, again, you can say 1, 2, but all this happened before a major move down. Or not a major move, but a move down enough to say that's a prominent move down. We're back up. That's clearly one hit. So that's easy to see. Down, up into another cluster. And, that's why I say that's 3 hits. But anyway, you get this confirmation candle right here because it's a reversal pattern. At that point, you go ahead and just go to the 15-minute time frame. Then price came up and grabbed the 50 EMA. You get in right here above the 50 EMA, and then you can then you would have caught that whole 200 pip move and been fine. But doing it the regular way, where you're waiting on it to pass the prominent wick, you would have missed that trade. So that's just one more thing to look out for it. Did the third hit give you a reversal pattern? Let's look at another example of that third hit showing a reversal pattern. Okay, so on this example, we're essentially looking right here in this area. The consolidation happening under the 50 and 144 crossover here. You've got 1, 2, 3 hits to the low, and then you get this reversal pattern, which this red candle followed by this one, and this one. Those 3 green candles. That's the 3 soldiers, or I think it's called 3 white soldiers reversal pattern, but I just say three soldiers because my candles ain't white. They green and they red. So I don't like saying 3 white soldiers. It throws me off. But that's a 3 soldiers reversal pattern to the high. And so since I see that, and that's on the third hit that it happened on, I go ahead and say that that's a confirmed killer crossover setup. So I'm going to go down to the 15-minute time frame. Everything else is the same after that. You still want to make sure that the 50 EMA hasn't crossed over the 144 yet. And if it hasn't, which it didn't in this situation, we just wait on price to come down and come below our below our 50 EMA. We get in the trade right here. That's 133 pips or 130 pips approximately that you could have caught on that trade that day. Let's go over one more example and then we'll call it a day on this video. All right, and here's one more example of that situation happening where you get a third hit and you have a major reversal pattern. So we got price consolidating above 50 and 144 EMA crossover. So we know we're just trying to sell this. And the 3 hits on this one is a little bit more difficult to spot. I would say 1, 2, 3 right there. All right. So this to me is a third hit. And at the top of that third hit, we got a spinning top pattern. And that spinning top pattern is a really powerful pattern if that happens on the third hit. But when that happened, let's see, this was at 11. That happened at 4 a.m. Central Time, like the 4 a.m. candle. So I was already back in bed. So I would not have caught that trade up here. However, by the time it came down, then this is 6 o'clock. This is my 7 o'clock candle. Actually, I would have missed this trade anyway. I would have. I ain't even gonna sit here and lie to you because I remember missing this trade. That's why I'm saying that. This one came up and grabbed the 50 EMA at 6:45, 15 minutes before I was like, okay, I'll enter the trade. And then I waited on it thinking it was going to come back and get it one more time, and it never did. So really, I need to tweak my hours for New York to say I'll start trading New York at 6:45 because even on that very first example where I showed you, that was on GU over here, the very first example, the entry, if we would have took the 6:45 entry, we still would have been fine. We still would have avoided this big move. How I talked about how it went way up and would have knocked us out. 6:45 would have been fine on that one. So yeah, I need to change my hours to 6:45 to 11 a.m. on as far as New York session hours are concerned. But yeah, back to this setup. You could have came in here. That's 150 plus pips for that day that you could have caught on that move, trading that spinning top pattern. Which again, going back to H1, it was a spinning top pattern here on the third hit. One more thing I want to point out, because I just thought about it because it happened today actually on the Euro CAD. This looks like it could have met that 3 hits and reversal pattern on the third hit criteria that I just talked about. Your third hit needs to be taller than your first hit. Your third hit needs to be taller than your first hit. So if I put a line on top of my first hit, the third hit never closed above that. So those previous examples I showed, like this one, the third hit, this right here, it closed higher than that first hit. On this one, this third hit right here closed lower than that first hit. So of course, if you're doing a buy, you're gonna want it lower than the first hit. If you're doing a sell, like on this one, you would want it higher than the first hit. So that would be why if you look at EuroCAD on today and you see that and be like, well, why didn't that one work out? Because that's like 1, 2, 3 hits, and then you got this major reversal pattern, but then it didn't work out. Why not? Third hit wasn't higher than the first one. So just throwing that out there as one more rule. Sorry, it's another thing to keep up with, but I'm trying to be as detailed as I can so that you don't get tripped up on this stuff. All right, y'all. I'll holler at you on the next video.